In this video, Dan Ives discusses Meta's stock performance, which has surged due to the company's increased emphasis on AI initiatives aimed at monetizing its extensive user base. He suggests that as AI capabilities continue to grow, the stock could see significant increases. Dan also points to a broader trend of increased AI spending in tech, highlighting the shift towards software-driven applications as a key investment focus.
Per share as they start to monetize it. In terms of Tesla, but clearly they're definitely seeing headwinds from an EV perspective, but we continue to view it's about autonomous, it's about ultimately robotics. That's really the future. That's why we're bullish on Tesla.
Going back to the whole AI story, we were just talking to a partner, Andreessen Horowitz, just talking about where he sees the money flowing when it goes to AI. What are you seeing when it comes to not only investor interest, but also the money going, following the development of DeepSeek and some other developments when we're talking about big tech and mega cap tech?
Yeah, we just put out a note today. I mean, we're seeing it's about 10% of budget in terms of IT budgets, in terms of AI spend. We're seeing about 7 of every 10 deals accelerate. And I think what you're looking at, if you have $325 billion of CapEx, it's the multiplier. I mean, you have to talk about this for every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across tech, across the ecosystem. Software, the use cases, that's where we've seen Palantir, Salesforce, and others. I think now we're really starting to see that monetization. I believe this is just the beginning of what's really going to be a massive spending wave in 2025.
Let me ask you, you're now in your new note, you're saying now is the software era when it comes to AI. But at the same time, we have a lot of people talking about, Jevons paradox. I just like saying it sometimes. Sure. The idea is that as things become less expensive, you're going to see more investment in AI infrastructure. So why isn't it the infrastructure era with the idea of this Jevons paradox that more money is going to flow in there because usages and use cases are going to grow and more money is going to need it for the infrastructure? It'll just be cheaper.
Yeah, and to that point, in terms of a Jevons paradox, it's really actually now unleashing the software, because the use cases are going to be software driven. That's why when you look at names like Palantir, Salesforce, MongoDB, Elastic, and I think ultimately Oracle, and even some of the hyperscalers, when you think about how they're going to benefit, it's the use cases. And I think now this is the software age that's now starting to take place. No doubt the infrastructure is going to continue to be a massive beneficiary, but the software piece, this is, I think, what the streets and wait for, the second, third derivatives.
All right, we're talking about Meta, we're talking about the overall trade. I got to talk to you about Palantir. So a lot of debate about Palantir. When we look at the analysts like you, many of them, they have a price target that's under where the stock's actually trading. Your price target's at 120. Where is this stock going? Has the valuation got out of control? Last time I checked, it was about 200 times forward earnings. Can it actually grow at the rate that the forward PE and a lot of people expect it to, including you?
Yeah, I mean, look, we believe it's the next Oracle. It's the next Salesforce. I mean, that's our view in terms of where this is heading, because of this, what they've built is unique in terms of AIP, and I believe, when it comes to use cases, they are gaining more and more share. And Frank, I think it's one where, look, Street, they hate it 20, despise it 50, screaming at 100. I mean, this is a stock that I still think has actually massive upside over the next 3